Our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it. There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. Okay, there's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago.
Cathie Wood is the founder, CEO, and CIO of ARK Invest, a prominent investment management firm specializing in actively managed exchange-traded funds focused on disruptive innovation. Known for her strong belief in Bitcoin, Wood and her firm have significantly invested in the leading cryptocurrency, particularly with the emergence of spot Bitcoin ETFs, which have experienced remarkable success. This success has only strengthened Wood's bullish outlook on Bitcoin's future prospects. During a recent interview with Peter Diamandis, a well-known American entrepreneur and co-founder of Singularity University, Wood discussed Bitcoin's soaring demand, largely attributed to the introduction of spot Bitcoin ETFs. She expressed confidence in Bitcoin's potential, predicting a substantial 23% price surge within the next 36 months. Wood's optimism stems from her belief that the increasing adoption of Bitcoin ETFs will drive prices even higher in the coming years. Wood also highlighted the success of ARK Invest's ARKB Bitcoin ETF, among the spot Bitcoin ETFs approved by the U.S. Securities and Exchange Commission earlier in the year. Ranking as the third Bitcoin ETF by total assets and flow, it has attracted significant investment, with $2.038 billion in assets and $1.563 billion in flow. Wood anticipates continued growth in ETF adoption, especially as more brokers begin offering them to their clients, further propelling Bitcoin's ascent in the financial markets. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Bitcoin, congrats on your ETF. It's done very well. You're number 3 now?
Number 3. This was David against Goliath. And, so this is a very nice win for us. Now, we're not finished. And in fact, in our business, what's interesting is the wirehouses, which dominate our customers. So Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens, wait until you see.
Explosion.
This is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. It is the first global, private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric. And it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.
Cathie eagerly anticipates a significant shift in the financial landscape as major wirehouses such as Merrill Lynch, Morgan Stanley, and Wells Fargo begin offering spot Bitcoin ETFs. She views this development as potentially game-changing for ARKB and other Bitcoin ETFs, as well as the broader crypto market. Recent reports from Bloomberg suggest that this momentous shift may arrive sooner than expected. Merrill Lynch and Wells Fargo's wealth management units have reportedly initiated access to spot Bitcoin ETFs for select clients, with UBS Group also offering them to certain wealth management clients on an unsolicited basis. According to Bloomberg sources, clients interested in these ETFs must have brokerage accounts and specifically request access. Additionally, Morgan Stanley is said to be exploring the possibility of adding spot Bitcoin ETFs to its platform, signaling a significant turnaround from initial hesitance. This rapid adoption underscores the success of Bitcoin-based products in the market. In Cathie's interview, she delves into the anticipated exponential growth of disruptive innovations, highlighting the profound impact they are poised to have on various sectors.
In the financial world, exponential, that concept, the last time investors heard it was during the tech and telecom bubble. And for them, that ended badly. Now they just don't believe it. They don't believe it's possible to sustain growth rates at 15, 20, 25% plus per year. But what we think is going to happen is not exponential growth, but super exponential growth as we get the convergence between among technologies out there. We think in the next 5 to 10 years, you will not recognize the world as we know it today. When we're trying to help people understand the same thing, again, not just investors, but anybody, we often say the last time we had multiple innovation platforms evolving at the same time was in the early 1900s, late 1800s, early 1900s. And absolutely right. That's what, got everyone off the farms and into the new world, right? This is the same, but it's on steroid. People are scared. And they are hugging benchmarks because they don't want to go through another tech and telecom bust. They don't want to go through another financial meltdown. People are talking about, another technology hype cycle here. So these are trigger words for them right now. So here's the irony. In the late 90s, I was there. In the late 90s, this idea of the internet captured the investors' imagination, and they started valuing companies on number of eyeballs potentially in 10 to 20 years. Too much capital chased too few opportunities too soon, and it ended badly. The technologies weren't ready, and they were too expensive. But what people do not understand is the seeds for everything happening now were sown during the 20 years that ended in the tech and telecom bubble. They've been germinating for 25, 30 years. We are ready for prime time. And unlike the late 90s, they're running away. They're running for the hills. What are the hills? They're benchmarks. It's ridiculous.
Meanwhile, Cathie Wood isn't alone in her excitement about wirehouses offering spot Bitcoin ETFs to their clients. Senior Bloomberg ETF analyst Eric Balchunas recently disclosed that wirehouse platforms are seriously considering adding these ETFs due to significant pressure from their clients. In a CNBC interview, Bitwise CEO Matt Huggan echoed this sentiment, foreseeing an even larger wave of institutional demand once major wirehouses embrace Bitcoin ETFs. Huggan emphasized that the initial surge in Bitcoin ETF interest primarily came from retail hedge funds and independent financial advisors. He anticipates the next wave to be driven by institutional capital, marking a new era of price discovery. Discussing Bitcoin's supply-demand dynamics, Huggan highlighted an imbalance, with demand far outweighing supply. He suggested that this imbalance, coupled with increased institutional interest, could propel Bitcoin's price significantly higher, possibly surpassing Bitwise's initial $80,000 prediction for 2024 and reaching anywhere between $100,000 to $200,000 or beyond by year-end. What are your thoughts on Cathie and Matt Hugin's bullish predictions for Bitcoin in 2024 and beyond? Feel free to share your comments and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.